All right, so just doing an example going through the second type of incomplete records question, you need to be able to do the net worth method or the markup margin method or type B or method B, as you might see it referred to in different places. Okay, some stuff similar, some stuff different to the other incomplete records questions that we've done. All right, I'm doing the example on page 397 in your book. It gives me information about a business that you purchase, bit of information about what happened during the year, end of the year, and then the question asks me, prepare a statement showing Monaghan's profit and loss for the year ended 31st December 15. I would say if this is an exam question, a 100 mark exam question, that says prepare a balance sheet for the year ended 31 December 2015. And that's what we're going to do. We're going to prepare a balance sheet rather than that is the statement that will show the profit and loss. You'll see as we go through this question, but I think they would directly ask for a balance sheet. Then it says prepare a trading profit and loss account, and then just advice for Monaghan. So the first step on this one, it's the same as the first step on the other one. We purchase a business for a certain amount of money consisting of a certain amount of assets and liabilities. There's probably going to be a difference between what we pay for it and what it's worth, that being goodwill. So we need to figure that goodwill out first. Okay, the very first thing we're doing is just figuring out what's the goodwill amount that we get from this information here on the 1st of the 1st. Okay, so if I just do a goodwill calculation. So all I'm going to do is add all the assets and liabilities together. You can lay that out kind of as a formal statement of capital or statement of net worth. The book does that. I'll show you that in a second. I'm just going to add the assets and liabilities together. Just going to do it kind of quite quickly. So all the assets listed here at the start. Premises are 812,000 plus stock of 14,150 plus debtors of 11,200. Creditors are a liability, so 9,800. I've got insurance prepaid of 840. That is an expense prepaid, so that is an asset. Wages due 2390, so an expense due is a liability, so add 2390 on, and that's all the information they give me at the start. Okay, so the four assets that I'm getting when you add them together are 838190. The two liabilities then, when you purchase this business, they add to 12190. If you subtract those from each other, you get 826. Okay, so you're getting 826 grand's worth of net assets. What do you actually pay for it is 854. So that's the purchase price for the business. So the difference between those has to be goodwill. So just 854, take away 826, and that is 28,000 goodwill. So that's going to go on our balance sheet. Just like that's what the book has for it. Okay, so it's the same information I have. Add the assets, add the liabilities, net worth, compared to purchase price, and there's your goodwill. Okay, that's just laid out a bit more formally. We're not actually asked for a statement of capital. I'm just using it to get the goodwill figure and to get the, well, I have the capital figure for the balance sheet, but it's just used to get the goodwill figure, so this is fine. Okay. Right, I'll just go through the adjustments then one by one. One thing I would say about adjustment A, having looked at it, is I think there's a typo in it. I think they want this to say 6 rather than 5, just based on the way they treat it. So just so my solution matches up with theirs, I'll just change it here. So part A, or adjustment A, or piece of information A. On the 1st of January, Monaghan borrowed 516 grand, part of which was used to purchase an adjoining warehouse and yard costing 450. It was agreed that this loan was to be repaid in 24 equal instalments over 12 years, commencing on the 1st of June. In the meantime, interest is charged at 10% per annum on the initial sum payable at the end of each month. So 10% per annum on the initial sum payable, so always on the 5/16, and then it's paid at the end of each month is what they mean by that. Grand. So a couple of things going on in this one. First one is at the start of the year I have premises of 812, and now I am purchasing 450's worth. Okay, so premises 812,000 is now going to be increased by 450. So on your balance sheet at the end of the year, you're going to have 1262. 3 zeros. All right. So that's our addition to premises. I also have to deal with the loan then. So interest 10% per annum payable at the end of each month, and it's in the meantime. So before you start making any repayments, the interest is starting to build up. So I take out this loan on the 1st of January, so I'm going to have a full year's interest here. Okay, so it's 10% per annum. So my interest then is going to be 516,000 by 10%. That's 51,600. And as I say, it's from the 1st of January, so no need to kind of adjust it for a certain number of months here. I just looked down the question because we normally expect to see interest paid here and to be setting up interest due. Yeah, so in part D of this question, you see that following payments are made during the year, interest 32,000. All right, so take away 32,000, and that's going to give me 19,600 interest due. So this is the amount that would go in the P&L. I think we're going to see drawings later that's going to adjust that, but for now, that's the amount that would go in the P&L. That's already paid, so that's going on the balance sheet as interest due. Anything else here? I'll just the repayments then. So it was agreed the loans were repaid in 24 equal installments over 12 years, starting on, as I say, I'm changing that to the 1st of June 2016. So we're doing the accounts for the 31st of December 15. So we don't have to account for any of these repayments being made. They're not starting until next year. But if they're being repaid in 24 equal installments starting on the 1st of June 16, well then I would say they're being paid twice a year for 12 years. So it's 24 equal installments over 12 years. I would say twice a year for 12 years. So that means in 16, so within a year of our balance sheet date, we're going to be making 2 repayments. So just the loan, I should split it up between long-term liabilities and liabilities due within 1 year, creditors due within 1 year. Okay, so we do see that occasionally where the loan doesn't just always go straight into long-term liabilities. If you're repaying some of the loan within a year, like I am in this case, I'm going to make 2 of those repayments within a year. Those repayments should go into creditors due within 1 year. So I have 516,000. It's 24 equal installments. So an installment is 21,500. So 516,000 divided by 24 is 21,500. So that means multiply by 2, and 43,000 should be creditors within 1 year, because my balance sheet date is the 31st of December 15, and these are being paid on, I would assume, the 1st of June, and then 6 months later, the 1st of December 16. So they are within 12 months of the balance sheet date, so they should go into creditors due within 1 year. the rest of it then. So 21,500 multiplied by 22 is 473,000. And that is after 1 year. All right. So that's it from A. On to B then. So during the year, Monaghan inherited 20 grand, and this was lodged to her business bank account. So you'll see at the end of the year here, I have the bank overdraft number. Okay, so I don't have to do anything in terms of this 20 grand kind of adjusting the bank. It's already kind of priced into this bank overdraft at the end of the year. But if she gets 20 grand and she lodges it into her business bank account, that is the owner introducing new money into the business, and that is capital introduced. Okay, so that 20,000 euro is capital introduced. So that goes down in financed by. So we have a capital amount from the start. It'll be the 854 that she paid for the business. And there's another 20 grand being introduced. What else? She also paid 12 grand out of the business bank account for her daughter's college fees. So private expense paid from the business bank account, that's drawings. And I'd imagine we'll see a few more drawings later on in the question. Part C then, Monaghan has estimated that she took each month goods to the value of 900 and 500 euro cash for private use. Okay, so 900 multiplied by 12 is 10,800. That's going into drawings, and then you've also got 500 by 12, which is also going into drawings. Same thing. Okay, so that's just the stock being taken out, that's the cash being taken out. Again, that being taken out, the cash being taken out is already priced into the bank. The stock being taken out is already priced into my closing stock. I have another way to come up with the purchases figure we'll see later. So that's the only entries I need to make in respect of that. Just put them into drawings. D then, the following payments were made by Monaghan during the year. So cleaning 3 grand, light and heat, etc. So these are going to form my expenses when I get onto the profit and loss. I'd imagine I'll have to adjust most of them nearly, just in terms of either drawings or in terms of amounts due at the start or at the end. So part D. So cleaning equals 3,000. I don't think I have to adjust cleaning. There's no reference to private use in terms of drawings. There's nothing at the start. There's nothing at the end. So I think cleaning is just going in as 3,000. Light and heat 13,600. I can see electricity due at the end. So I can see light and heat used in here on drawing. So I'm going to have to adjust light and heat. So light and heat paid during the year is 13,600. What does it say in terms of the drawing here? It's 20% of the light and heat used. So the light and heat used would mean I need to add on the electricity charges due. So if there's electricity charges due at the end of the year, I must have used that electricity. So I should add that on to the 13,600 before making my drawings adjustment. So you'll see other ones are 25% of insurance paid. This one is light and heat used. So you just need to be careful with the wording there. So if it's 20% of light and heat used during the year, what is used during the year is the 13,600 I paid for, And also, if I owe this 350, I must have used it as well. All right, so plus 350 due, and that 350 due is going to go on the balance sheet as well, remember? There wasn't any at the start, was there? No, it's insurance and it's wages. So 13,600 plus the 350 is 13,950, and then 20% of that is drawings. All right, so take away, so 20% of 13,950 is 2,790. So that's 20% drawings. So subtracting those from each other is 11,160. So that's going to go into my P&L. Next up then is insurance. Just so she's estimated that 25% of insurance paid during the year is for private use. So with insurance, I'll make the prepayment from the, I'll deal with the prepayment at the start of the year, but just the calculation of the drawings will be slightly different. So yeah, if I go over here maybe, so insurance is 6,600. Of that, see, so 6,600 during the year, and then there was an 840 prepaid. So there was an 840 paid last year, but that's this year's expense, so it gets added on. That gives me 7,440. The drawings adjustment then, so 25% of insurance paid during the year. So this 6,600 is paid during the year. This 840 is prepaid. So it is paid last year. All right, I'm only doing the 25% adjustment on what is paid during this year. So I'm going to take drawings away, but just note that it's 6,600 multiplied by 25%. Okay, so here I adjusted 13,950. Here I'm going back to the 6,600, just the difference between used and paid. All right, so 6,600 by 25% is 1,650. That's what's coming off the insurance for private use. You could take it off up there if you want after the 6,600 and add the 840 on later, rather than putting it in here. And that is 5,790. What else? So salaries and general expenses of 103. So if I just move up here. So salaries and general expenses are 103,000. And the only adjustment there is here is, yeah, this is wages due at the start of 2,390. So some of the 103,000 that I'm paying this year is for this 2,390 from last year. So I take away the 2,390 due. So 103,000, take away the 2,390 is 100,610. Okay, and that's it for salaries and general expenses. There's no drawings to be made there. There's interest, so I've already dealt with the 32 in terms of coming off the interest for the year and coming up with my interest due. I've dealt with most of E here. I've dealt with most of the drawings, apart from this one here. So 15% of interest payable. So once I do that, I'm kind of done with all my adjustments. I think there's not too much to do in F and G for the moment. So 15% of interest payable are attributable to the private section of the business. Okay, so interest payable is the total interest for the year. Okay, so it's the 51,600 that's payable. 32,000 is what you've actually paid, but 51,600 is what is due or payable for the full year. So that's what I'm going to adjust with drawings. Okay, so interest payable is 51,600. Drawings then are, what did it say, 15? Yeah, 15% of that. So 15% of 51,600 is 7,740. Subtract those and you get 43,860. So that's what's going to the profit and loss as your interest expense. Okay, the 7,740 is going to drawings. Okay. Again, it's fine to kind of see, because the business is paying it all. That's why I kind of do my interest due with reference to the 51,600, because it is the business which is going to actually pay over this 51,600. So the business is going to have to pay the 19,600 due. I kind of do the drawings one a little bit separately because of the 51,600, then I'm saying 7,740 needs to go into drawings and 43,860 is for the actual business expenditure, so it goes into the profit and loss. But because the business kind of pays the full whack, and then later on we kind of adjust it, profit and loss or drawings, it's that you use to calculate the interest due. All right. F, gross profit was 50% of sales. So you'll see when we come to the profit and loss, we don't actually have sales or purchases information for this company. So this gross profit is 50% of sales. I'm going to need that to work out the sales, and then later on purchases are going to be like the final balancing figure I have. So I'll leave that to later. G then, just assets and liabilities at the end of the year. So I've already used electricity charges due, stock, debtors, creditors, bank overdraft. They're just going into the balance sheet. All right, so that's all the adjustments done. What I'm going to do next is prepare a statement showing Monaghan's profit and loss for the year ended. As I said, that's a balance sheet, and they should be directly asking for the balance sheet. I would imagine that's what they'll do in an exam. Okay, so I'll do that in the next video.